Celsius Holdings down 52% in the past 10 weeks. Listen, I've been digging into Celsius a little bit. And before we talk about the numbers, the projections and those sorts of things, let me say this. I've just done a lot more study about the business model, the raw business model of where they compete, how they fit in the marketplace, those sorts of things. And I have walked away more bullish on Celsius. So much so that it's like maybe I'll start a position. It's gotten to that place where I'm like, might do something here, okay? And the reason being is they have a really nice niche in the market, and it's a big niche. So I don't think niche is in like it's a small category, but they really have a massive amount of gym goers, personal trainers, people that are looking for that spark, but want something that they view as healthier than, like, let's say a traditional Monster product or a Red Bull or something like that, right? And so many years ago, like 5-6 years ago, Bang Energy came out, then Rain Energy, which was created by Monster, competed against that. And that was kind of a move in that direction, right? And that kind of got people thinking about like energy drinks as potentially healthier, right? But then Celsius came out and kind of took it to the next level. And over the past 4 or 5 years, Celsius has grown into a very large drink business, right? Where you can go across the United States now and to most stores, you're going to find Celsius products in there. Convenience stores, big stores, I don't care if it's a Target, your food stores, Walmarts, right? Costco and Sam's Club and those sorts of big stores. And so they've done very well, right? And now just the question is, can they become a monster, right? No pun intended in regards to that. But in regards to Celsius Holdings here, right? If we run some projections on this baby, so let's say they could do about a 30% revenue growth number a year for the next 4 years, right? 30% on average, that is, right? Which would be pretty darn incredible. And let's say they just slightly outpace that. Let's say they did about a 35% clip on net income. By the way, this is our new fancy feature on 1000xstocks.com, baby. Now you can run projections and all that good fun stuff, right? And let's say we're going to do, if they're growing at a 30% plus clip, revenue, net income, to be honest, a fair PE ratio is in the, I would say 40 to 70 range for a company like that. 40 to 70. You got to be if you got a company growing 30% plus, top line, bottom line, you expect that to continue, you got it. You're going to pay up. Like minimum, you're going to likely pay like a 40-ish PE, right? So we're just going to run a 40 and a 70 on all these babies, right? Market multiple usually is, we can call it 15 to 20, but if you're growing at a way faster clip than an average stock, which obviously is Celsius, then you better command a much higher valuation because people will pay up for that, right? And so we're looking at Celsius today is about $46, right? And so taking a peek here, right? I'll say if we want to, because you're not just, if you're going to buy a stock like Celsius, you're not just owning it for the next year or two, right? You're really focused on the next many years, as you would be with a growth company. So if I look out to like 2028, for instance, right? $5 billion of revenue they should be doing around then, right? About $715 million in net income roughly, right? And if you could command that sort of P range, you're somewhere between about 123 and about a 216, which is a pretty darn impressive CAGR, compounded annual growth rate over the coming years, right? And I don't think those numbers are crazy. Now, the scary thing is, though, I will say, let's say we hack that. So let's say Celsius isn't even remotely close. Let's say Celsius isn't even remotely close to a 30% clip. Let's say 15%, which I think 15% is probably worst case scenario for Celsius over the coming years. That would be really bad for them. And so let's say they do like a 25% net income number in that sort of situation, which also would not be good in my opinion. If they do only a 25% CAGR in regards to net income, that's not good for this company considering the stage it's at. It should grow way faster than that. But then we're looking at a stock price somewhere between about 91 and about 159. But then you're going to say, well, you're not going to be able to command that sort of PE. So let's say you're going to be willing to pay about a 28 to about a 45. That sounds about right for those sorts of growth rates there, right? So if you're in about a 28 to a 45-ish range, somewhere in there roughly, or we could even take it up to a 50. We'll say, on the high side, a 50. I mean, yeah, you don't have a lot there, right? But that would be a pretty bearish scenario. Keep in mind, Celsius has been growing way faster than 15% revenues and way faster than 25% net income. But in a kind of a bear case, that would be rough for this company, right? Very, very rough. So I don't know. These are just all things to consider in regards to a stock like a Celsius here. So, yeah. I mean, at the end of the day, I think it's pretty close to a buy. I do want to see the next numbers in regards to this one. The only thing I'll worry about is, let's say the next numbers are good and then the stock just blasts higher and then never comes back. That's always a potential, right? But there's so many stocks in the stock market that are deals, like I'm not that scared about that. Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. SoFi. This is, in my opinion, the most important thing for SoFi overall. This shows you the amount of members. I call them customers. They call them members. 6.2 million members in the same quarter last year, right? Now they're at 8.7 million customers. This is extremely important. If you look at Galileo, the tech platform, they went from 129 million users to 158 million accounts now at this point in time. And so what do you see when you see that? I'll tell you what I see. I see a company taking market share. I see a bank taking market share and putting themselves in a great position for the next 10, 20 years. They're stealing away customers. A lot of the millennials, Gen Z, and the next generation, Gen Alpha, a lot of those folks are going to be going with SoFi as their main financial institution versus a Wells Fargo, a Bank of America, a JP Morgan, places like that, right? Now, check this out. This is their income statement. Total interest income came to $674 million. That's versus $469 million the same quarter last year. Net interest income, which NII is probably the most important thing you could ever look at for a bank. $412 million versus $291 million in the same quarter last year. That's extraordinarily strong growth for SoFi in net interest income. Now, total net revenue, $598 million versus $498, so that grew about $100 million on a year-over-year basis, right? If we look at net income for the company, we call that a winner, a chicken dinner. $17 million of net income in the positive versus in this same quarter last year, they lost $47 million. So the company has now sustainably flipped over to profitability. Now the EPS number came in at 1 cent. That's versus 6 cent loss in the same quarter last year. Keep in mind, some folks were talking about whisper numbers of 2 cents, 3 cents. So, not as exciting as you might have wanted to see, but overall, solid income statement here. I gave them a B minus. If we look at weighted shares diluted, this is one issue you have with SoFi, is a lot of share dilution in regards to SoFi. We're hoping that starts to come down in a major way and we start to move the other way, like a PayPal situation. But that is one issue you got, right? That's why I gave it a B minus overall. Now, if we look at the balance sheet, obviously balance sheet's very important for all companies, but it's extremely important when it comes to banks, right? Because they're taking risk when they loan out money. Now, if we look at total equity here, equity is around $5.9 billion. Now, how does it compare versus market cap? Market cap's at about $7.7 billion. So there's only about, we can call it a little less than a $2 billion difference between the equity of the company versus the market cap. And so that's extremely impressive considering SoFi is a growth stock. Like, this is a major growth stock, not just like a little growth stock. Like, this is a major growth stock. And so when I look at it, I got a major growth company with an incredible next 10, 20-year opportunity. And I can get stockholder equity versus market cap at only about a $2 billion difference. Less than $2 billion, like, that's pretty impressive. So that's what makes the risk reward in regards to SoFi very, very impressive, right? So SoFi, let me be clear, the stock's still a buy. But I do believe SoFi got outshined by PayPal today. I do view that. I walked away from looking at both those company numbers, and I walked away feeling good about SoFi, right? But I just walked away feeling better about PayPal. And it doesn't mean PayPal is going to outperform SoFi over the next 3-5 years. It's just an overall feeling between seeing the numbers, hearing what the company's expecting moving forward. I just walked away feeling more confident. And that could also be a game of expectations, right? Maybe I went in with a little higher expectations than SoFi, a little lower expectations than PayPal. But I just, as of today, I sit here and I feel at a higher level about PayPal than SoFi. And once again, it doesn't mean I feel less bad. It's like saying I got a Model S Plaid and I got a Model X, right? And it's like saying I feel better about my Plaid than my Model X because I can go faster in it, right? It doesn't mean that much at the end of the day. I like both. But overall, in regards to SoFi, the numbers were very good. We all know that, right? Clearly, they're taking market share. They continue to take market share. That matters so much. If you're a long-term investor, it's the ultimate thing when a company can continue to grab market share. It's the Amazon effect, right? Amazon just over the decades just grabbing market share. SoFi's doing that. It's big, right? And Noto, the more you see Anthony Noto and the more you watch him and the more you see him executing with his business model, you've got to start to wonder, is he going to be the new age Jamie Dimon? We hear Jamie Dimon is starting to prepare for retirement. Doesn't mean he's retiring right now, but the preparations have started at JP Morgan for Jamie Dimon to eventually walk away. It's just a question of, does he walk away next year, the year after, right? But it's likely in the next few years. And so somebody's going to have to take that banking mantle away and really become the face of banking, and the guy that goes on CNBC and Bloomberg and everybody wants to interview him, right? Fox Business, everybody wants to interview him, get his state on where banking's at, where the economy's at, where his company's at. And that mantle is going to be out there very soon, likely in the next few years, right? And I don't view anybody as really taking that mantle right now. If I look at the guy who's leading Goldman Sachs right now, I don't see it in him. I don't see it at Moynihan, at Bank of America. I don't see it at any of these folks, to be honest. And so I'm looking and I'm like, Anthony Noto might actually have a chance to grab that mantle and become the next Jamie Dimon that everybody looks at in the banking sector for not only how's your company doing, but how's the economy doing? How's, the whole banking system doing? Now, in regards to SoFi, it's a smaller position for me. It's about a 1% weighting in the public count, roughly, right? That's about a $2.2 million portfolio. It's $22,000 position, so about a 1% position. SoFi I view as one of those stocks you can build out to about 1% to 3% position sizing is appropriate. And the reason I can't build it higher than that in terms of the amount of money I put in, like let's say I build it to a 2% position, it grows to be a 5% position. Great. But it's not like I want to put in that much money because at the end of the day, I have trust issues with financial institutions. There's only 3 financial institutions I've ever owned: JP Morgan, Goldman Sachs, and SoFi, which speaks volumes to how I respect SoFi to have it in that sort of sentence, right? But I don't usually like these sorts of stocks. So the fact that I even have a position here speaks volumes about where I think the risk reward profile is for SoFi over the coming years. But with that being said, I can't take too much risk. I'll keep the position sizing smaller. If SoFi is really that 5x, 10x opportunity, I think it is, I'm going to be very happy with having put $20,000, $30,000, $40,000 in the stock and it grows into a $200,000 or $300,000 or $400,000 position over the coming years. Like, bottom line, I'd much rather have that than put $200,000 or $300,000 or $400,000 into the stock and then they go belly up in a big recession or something like that, right? And I'm like, oh my gosh, like I put myself in a bad position. That's a way I view kind of these a little higher risk type stocks, right? So in regards to SoFi, I'll speak about that one because PayPal's a little more in depth, and I'm going to take you over the next several years in regards to PayPal. But here's the deal with SoFi. If smalls continue to roll through the back half of this year, SoFi will be $10 plus before we even get to 2025. Okay, it'll be back to the double digits before we even get there. Now, in regards to longer term for SoFi, it's truly the sky's the limit. It's truly the sky's the limit, the situation in regards to SoFi. The bottom line is they're grabbing the millennials, they're grabbing the Gen Z, they'll likely be grabbing the Gen Alpha, and they have an opportunity to become a massive bank over the next 10, 20 years. As long as they make it through the recessions, they don't go belly up in those recessions, they make it out to the other side and they continue to take market share, SoFi sets themselves up where they can become the next JP Morgan, the next Wells Fargo, the next Bank of America. It's not happening today, it's not happening tomorrow, it's not happening next year. But over the next 10, 20 years, they have that sort of opportunity. And do you know where the market capitalizations are for the big banks, the big financial institutions? They're in the hundreds of billions of dollars. We're talking 12 figures. Do you know where SoFi's market cap is? It's $7 billion. So the sort of opportunity there, as long as SoFi never goes belly up in the recessions that we'll have over this next 10, 20 years, oh my gosh, is upside ridiculous. It's truly the sky's the limit situation. There is no top on SoFi. It could be a $500 billion company someday, a $1 trillion company someday, right? There's no top there. But there's big risk because it has to get through the recessions, right? AMD, and then we'll get to Mr. Softy.
Months ago, the stock is up 5% after reporting record revenue in the data center segment. Joining us now is Christopher Rowland, Susquehanna senior analyst. Christopher, strong ramp here on Instinct GPUs, but is it worth wondering how much of that momentum continues beyond the ramp quarter?
Yeah, very good initial read here, but we are absolutely waiting for the conference call. We're waiting for Lisa Su to either raise or not raise that full year Instinct AI GPU number, and we will see. You know, we said in our preview, we would likely think they were going to raise it 500 million to 4.5 billion for the year, but we will see.
Okay. What if they don't raise it?
So I really like Lisa Su as a CEO. Now, let's be very crystal clear, though. She's gotten her butt kicked by cousin Jensen, right? Cousins, right? Jensen's been kicking her butt over the past year and a half. Like, we just got to be honest, right? With that being said, I like Lisa. She's a phenomenal CEO. She turned this company from a $2 stock into what it is today, which is, you know, one of the most looked at, invested in stocks in the market. Absolutely incredible the turnaround she's had, right? That's the first reason I really respect her is what a great job she's done. Tremendous, right? Like, you know, that's like Hall of Fame. She should be put in like the stock market Hall of Fame of like greatest CEOs ever. Like taking a stock from $2 joke of a company into what it's become, like legendary, right? The second reason I really respect Lisa on such a high level is she never really like pumps it. You know, she could easily come out and you know, pump this and that. And, you know, I feel like she's very conservative with the way she talks, with her numbers, those sorts of things. I just really respect that, you know, because she doesn't have to do it that way, right? And so, because I know a lot of CEOs that they downplay anything bad, and then, you know, the top stuff is like the greatest thing ever. And she just doesn't really do that. And so I respect that. And so, you know, very respected CEO. Yeah, she's gotten her butt kicked by Jensen the last year and a half, but at the end of the day, she's still Mount Rushmore of greatest CEOs of all time.
Do the rest of the results that we got in this earnings report matter as much? Or would they be enough to I guess, offset a lack of a raise?
Sure. These are nice numbers. They're a little bit better than expected, but we think the swing factor here in terms of the stock price is going to be that MI 300 guidance or not.